afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. It's the middle of the week. We're trying to get a sense of what has been happening on the Securities Exchange and what is left in terms of opportunities for you as we continue towards the tail end of the week. Now, it's been such an interesting week in Kenya, at least politically. We are seeing the hit being turned on, but who's actually monitoring the strings? Earlier in the week, we had a very critical decision that was passed by the Chief Justice Maraga in his advice to the Executive Office, which is the President of Kenya. His advice was the fact that Parliament had not met the two-thirds gender rule, and as a consequence, his proposal was that there was a need to dissolve the Parliament. What does this advisory mean, and what does it mean for the political case in Kenya? And more importantly, as an investor, when you're looking at 6 months, 18 months, 24 months, 36 months, investing and putting your money in Kenya, does this decision make sense for you? Should you be looking out for any risk factors? Or is it just another ploy in the usual Kenyan politics? That's a discussion that we will be taking a deep dive into later on in the show. I will introduce the guest for that segment as we continue. I'll start us off on the markets and what is happening there. But before we continue, I'd like to extend an invitation to you to use our SMS line 20146. Where are you watching us from? Are you paying attention? Does the politics of the day make you have sleepless nights? Is it gearing you up for the upcoming elections? Are you excited? Is it noise? Does it make sense for your investments? If you run a business, does this decision by CJ Maraga actually put question marks into the continuity and the sustenance of your business? If you have shares or are invested in the government of Kenya through the treasury bonds or the treasury bills, are you concerned, or is it a matter of let's watch and see what happens? Either way, I want to know who you are, what your investments are, what your concerns are, and what we can be able to answer as we continue with the show. 20146 is the SMS line, or you could reach out to me, Mbithe Mwema, on all social media platforms or Metropole TV. Now, let's have a look at what was happening on the Nairobi Securities Exchange yesterday. There was actually a huge jump on turnover, which more than doubled compared to where we were at the beginning of the week. NSE All Share gained 23 basis points to 139.77 points, largely driven by an uptick on Safaricom. Safaricom, we saw a bit of uptick on price, and it traded at about 30.5 shillings compared to 29.90, which is the price level that it traded on Monday. NSE 20 share index, slight movement down, 8.78 percentage points, and it closed at 1,839.96. NSE 25, slight uptick, it closed at 3,219.35%. Let's take a look at what happened to the movement in turnover. That's the next slide from our graphics team. So you have an evolution there. Again, we've just been tracking the movement in turnover for September. It started off on a low. We saw it get to the highest level last week on Thursday, 3.8 billion. 115 million shares were traded in Safaricom. And I keep saying the thing is, if we are the consumers of Safaricom as a product, that's you and I, whether it's on M-Pesa, whether it's data or voice, then there's a huge question mark, because the reality is you and I only make up 4% of the ownership of Safaricom. And this is you and I in the entire East African region. So we are 100% in terms of the contribution to the revenue of this stock, but we are not even owning any material sum in terms of our individual retail ownership. The ownership is 4%, which is something that I think we need to be able to change. And when you see investors, foreign investors trading 115 million in Safaricom, then the question is, what is it that you are blind to? Because there's certainly an opportunity for this technology stock in Kenya. As we continue with the volume, it sort of corrected downwards. And by yesterday, we had seen a slight uptick. 607 million was the turnover for the day, which almost tripled compared to the previous day, 203 million. What was happening here? Again, Safaricom was at the top of the charts, and we saw it print 30.5 shillings. It was largely traded by foreigners on both sides of the trade. Let's take a look at what the other top counters were. We also saw East African breweries topping the charts in terms of turnover for the day. I'll give you a brief on what was happening there. We have Safaricom was 9.9 million shares traded. Kengen, we also saw a huge move, 4.657 million shares traded. On the price for Kengen, we've actually seen a downward price correction, and it's now trading at the 5 shilling mark. It's a stock that we keep looking at here and saying if you are looking for exposure in utilities, there's slightly more value in Kengen over Kenya Power, largely because of the corporate governance of the company and the resources as well as the management that they have been engaging in terms of managing their finances slightly better than their counterpart at Kenya Power. Equity Group, 2.4 million shares traded over the day. It's now trading at the 36 shilling mark, and it has been stable at that point. Kenya Re, another investment of 1.8 million. Kenya Re, we've been seeing small prints. 2.5 weeks, 3 weeks ago, we saw a huge trade of 5 million go through. We're starting to see a bit of a pickup at 1.8. The share is currently trading at 2.3 shillings per share. And for Ask Mbithe, one of you actually asked us to articulate the investment case for Kenya Re. So I do hope you can join us on Friday as we just take a deeper dive into understanding who is Kenya Re, who are the shareholders, what is the key business, and what is the sustainability of that business, and more importantly, what should you do in terms of positioning as a shareholder. KCB Group, 1.4 million shares traded at the 38 shilling mark. It's straddling at that level. This overview gives you the volume of the shares traded. But by virtue of turnover, Safaricom was the top traded, followed by East African Breweries. East African Breweries, we have seen a downward price correction from last week. Last week, it had hit 168 shillings per share. Now it's at the level of 160, 161 shillings per share. We keep saying, as it's coming down, if nothing else, if you are a partaker of alcohol and if you do partake the contents or the products from East African Breweries, really you have no reason not to be owning this share. If you're able to partake of alcoholic beverages, at the very least, invest in East African Breweries for the longer term and at least earn a dividend from the money that you consume. I think as we keep looking at the NSE and other investment opportunities, it's important for us not just to be consumers or partakers of the goods and services that some of these companies portray, but also on the backside, be investors in these companies so that you're actually earning or putting some money back rather than consuming it all. Let's take a look at the top gainers for the day. That's our next slide here. So the small stocks, TPS Eastern was up 6.73% to 16.65. A bit of upward movement there on Umeme. The key one that we have been looking at on our watch list has been Nation Media, 18.05, up 5.56 percentage points. We keep saying at this level, 18 to 19 shillings per share, there is an opportunity to take profit, and we have been seeing this has been the case. This is a share that came from a low of 13 shillings, went all the way to 20, and has been losing ground between 19, 18 shillings per share. If you're looking at it from a speculative perspective, you're probably a bit late to the party because 18, it could probably go up to 20, not too much headroom there. But if it goes lower, there could be an opportunity for you to look at it. If you are looking at it as a fundamental, from a fundamental perspective, in other words, trying to understand the business case for Nation Media, then at this level, you might want to be a bit cautious because what COVID has done is it's actually made everybody have a different way of consuming advertising spend. So perhaps not too much allocation is going to Nation Media as was the case before COVID-19. Total Kenya and Total Kenya and BOC, also slight upward movement. Let's see who are the top losers for the day. Top losers, again, the smaller caps, Kenya Orchards, down 9.8% to 11.05. Stanley Fahari was down 7 percentage points to 5.04. We did cover this last week. There was a huge trade that went through last week on Monday, about 5 million shares. And we've been looking at it, and we had a deep dive on Friday during our Ask Mbithe segment. It was the stock for the week that we were looking at. And there are a couple of things happening with Stanley. It has a lot of property, but the issue is the property yields. The return it's getting on its properties have been declining. The last reported number is 7.4%. So it becomes a bit hard for investors to put money there. But in as much as it's trading at 5.05, there is actually a discount of this price, which is the market capitalization of the stock, and you effectively multiply the share price by the number of shares. If you compare this to the value of the real estate sitting on their books, there is a material discount. So there has been a possibility of an arbitrage opportunity, but one that you have to be very careful about because liquidity on this particular counter is not deep. So you could buy and then at the time you want to exit, you're unable to. So something to look out for, and if you want to take a look on that, it's better to have a long-term perspective on Stanley. Home Africa, always on our charts this week and last week, up one day, down one day, not too much happening there. Uchumi again also has been on the radar, up and down. We've been seeing volumes on the previous day. On Monday, there was a huge volume trade that went through. It's now at 0.29. And then again, we also have Kenyan downward movement. It's now down 6 percentage points to 5. And as it's getting to the 5 shilling level, if it tapers off at that level, it's a good entry point for the longer term. That's pretty much what was happening on the NSE yesterday. Today has been a very quiet day, not too much happening, negligible volumes. And some of the counters we look at, Bamburi, it's now at 24 shillings, nothing much happening there. East African breweries, 160, not too much happening there. The banks, KCB equity, KCB is at 38, equities at 36. Safaricom is still at 30 shillings, 30.5 shillings, so not too much. It's a bit of a quiet day, but we'll probably have a better perspective once the market is closed. Now let's change gears a little bit. This week, CJ Maraga's advisory to the president. Dissolve your parliament because it has failed to meet the 2/3 gender rule. Well, is this substantial to you as looking at Kenya as an investment case? Maybe yes, maybe not. But it's important for you to keep your head in terms of understanding what are the politics of the day and what do this mean for your investment case. Very important scenario for you, especially if you are an investor in Kenya. We take a short break. When we come back, we will be joined by Colonel Benjamin Mwema, who is a political analyst, to take us through how did we get here. What are the options available to President Uhuru Kenyatta? What does this mean for investors? And how should you look at your investments in Kenya for the next 2 to 3 years as we get to the election cycle? Tell us where you're watching us from, what you would like to know. SMS line 20146. See you after the break.